about 90 points lower on the Nifty.
Market is down about 50 odd points. It's off the lows by quite a bit. There is a slip once again. The Nifty is down about 62 odd points.
Okay, it's been a very, very volatile market, though within a 100-point band on the Nifty.
The mid-cap index is ending absolutely flat, though there are more declining stocks than advancing stocks.
Market falls for the fourth consecutive session as growth fears hurt markets across Asia. Nifty manages to hold above 11,300. Sensex slips 200.
Financials remain under pressure. The Nifty Bank slips more than 300 points. Yes Bank stages a strong recovery. The company says that pledged promoter shares were sold in the open market on Tuesday. They also said that the group president at Yes Bank, Rajat Monga, has decided to quit the bank.
Innocent Bank fails to sustain the rebound after managing director Ramesh Sopti allays fears over stressed accounts. Also says a succession plan will be announced later this month. That's a CNBC-TV18 exclusive.
See a mixed day. Even as September sales are better than August. Eicher ends 3% in the green, but Bajaj and Hero MotoCorp see some minor cuts.
And Indigo takes a hit after co-founder Rahul Bhatia moves the London court for arbitration against other promoter Rakesh Gangwal. In other stocks and news, DLF surges after paying all its dues to cybersecurity developers, while oil marketing companies get a boost from lower crude prices. Well, those were the top 5 headlines from Dalal Street on a day when the market did end in the red but left us a little happy because we didn't fall as much as the rest of the world. Well, this is the show where we're going to tell you all that happened in those 6 hours of trading in just 5 headlines. I'm Lata Venkatesh. With me, my colleague Prashant Nair. Hi, Prashant.
Hi, Lata. Tough day once again, even though, the market was down just 0.4% or so. We will tell you what happened. We'll get you lots of opinion, important opinion as well. Nilesh Shah of Envision Capital will be joining us to tell us his top sectoral bets, market direction. Also on the show, we have top banking voices. IndusInd Bank's Ramesh Sopti tells us that nothing has changed materially on the business front in the last 1 month or so, and there will be an announcement on new CEO later this month. Also with us to decode the day's trading action is technical expert Mitesh Thakkar. Mitesh, thanks very much for joining us here on the show. We'll come to you in just a bit. But as always, let's spend 2 minutes taking stock of the market and what happened. Lata.
Well, we didn't have very good global cues. There is a tariff hit fear. But look at our own domestic GST numbers that came in on the day before the holiday on 1st of October. 91,000 crores for the month of August, way, way below the average, indicating that sales are just not picking up for a broad swathe of stocks. For a broad swathe of products. It's the best indication you can get, the most powerful indication of growth not quite coming up to expectations, not even as good as last year. And then, of course, the global backdrop being very weak. The thing that were dragging the Nifty down were partly global, partly domestic. From the global point of view, the metal index doesn't do well when China doesn't do well. And domestically, the banks are not doing well. And the banks are not doing well largely because of fears that housing finance and realty exposures can still come back to haunt and give them some more NPAs. Above all, the MAT credit clarification that came from the CBDT was also not to the advantage of the markets. Basically, this minimum alternate tax is the minimum tax that companies that are eligible to not paying any tax can pay. They get MAT credit in previous years. This year, if they opt for the lower tax bracket, they have to lose all those credits, and that kind of soured the mood a bit. So all told, there were enough reasons to go down. So what we rejoice is that despite all these reasons, we didn't fall much.
Absolutely. So let's just take stock, Lata, of stock-wise and sector-wise. Where was there pressure and where there was selling? So as I said, 55 points off the high, 55 points off the low, somewhere in the middle is where the market ended, 0.4% cut. Bank Nifty did a little worse. Wherever sectorally there was pressure, the pressure was seen in the private bank index, and there was metals, which is a more global-facing sector, which was down and out as well. Remember, globally as well, things are starting to look a little poor. Data has been not that great. What did well? Media, largely in thanks to Z. Energy as a pack was higher, IOC, HP, BP, and there was real estate, which actually was up as well. DLF bounced from the lows. I mean, just a bunch of stocks now on your screen which got beat down massively day before yesterday, that is Tuesday, or, I mean, over the last couple of days, and the reaction today. So in the case of Yes, in the case of Z Entertainment, there were rebounds. There were sharp rebounds, which we saw, and actually RBL as well. Not so sharp a rebound, but these three stocks ended in the green. But we had names like IndusInd Bank, Piramal Enterprises, and Indiabulls Housing, where the selling continues. I mean, these six stocks basically were caught in a frenzy, selling frenzy on Tuesday. Three of them saw some reversals, three failed to see any reversal. But in any case, I mean, financials generally got sold. I mean, the AAA rated ones, I mean, so-called highest quality ones. HDFC Bank was down 2, Kotak Bank was down 2, Axis was down 1.5% as well. Metals, Vedanta, Hindalco, Coal India, Tata Steel, all down and out. And the one stock which sort of is continuing to lead up the PSU basket is BPCL, strong 8% move, and that lifted IOC and HP along with it as well. There is, of course, the divestment news, but oil prices slipping has helped in the last 2 days. Lata.
Okay, that's a very comprehensive view, Prashant, and we will discuss them one by one, the oil PSUs, the financials, the IndusInds, all that's coming up for you. But first, let's tell you about what we heard from a market expert, Nilesh Shah of Envision Capital, who we caught up with. He believes that the lows of the last 2 months, August and September, should hold for this month. That's, of course, 10,600. He also added that IT stocks provide a value proposition. Let's listen to a slice of the conversation we had with him.
Well, what it looks like is that the lows of October, September, August, September, I think they should hold. Hope for the best, prepare for the worst. That's probably the only mantra. I mean, hard to kind of really put it to work, hard to implement, but I clearly think that's probably the need of the hour, need of the times. See, I think the way I look at it is that this government now has become very responsive. Okay, so I think when the first time we saw the market go below 11,000, they stepped in and cut the corporate tax rate. They removed the surcharge. If you really see, I have not seen the kind of sound bites and policy moves on privatization in the last 17 to 18 years. Okay, I mean, we'd forgotten the word strategic disinvestment or the word privatization. That's back, that's the flavor of the season. The reality is that the value proposition which Indian IT sector offers to some of these global corporations, I still think that that value proposition is pretty much intact. Technology can keep changing. You will always find newer technologies coming in as invention progresses. But clearly our IT companies will still have a very meaningful role to play. May not be in the creation of that technology, but definitely in terms of implementation and deployment of the technologies.
Well, that's Nilesh, always an IT bull. But what of the general markets? Nilesh is quite emphatic that we're not getting to 10,600, but that's minor solace. At this point in time, we thought we had got that 800-point gain from 10,600, but now we have lost about 150. Mitesh Thakkar, our technical expert, to tell us a little more. Mitesh, what's your sense? Do we hold the 200-day moving average? What is that? 11,150 or thereabouts? Will that be at least a definite support? I mean, 11,250?
No, in fact, to be very honest, I was having a lot of hopes over the 58, the 50-day exponential average, and a couple of other weekly averages also placed over there. Given that kind of scenario, my sense is that I think, we actually looking at this level as the key to watch out for.
Not helping. We are not getting your audio at all. We'll try a little later. Thank you very much for staying with us. Let's get to the second headline now. Financials continue to be under pressure. Selling was seen mainly in private banks and in NBFCs. Nifty Bank underperformed, frontliners slipping more than 311 points.
Yes Bank staged a strong recovery after hitting a 10-year low on Tuesday. The stock gained 33% today to post the biggest ever single-day gain ever. This after, in a conference call with investors, the CEO Ravneet Gill said the bank was absolutely sound and played down the sale of stake by founder Rana Kapoor and other top employees. Gill also announced that Group President and former CFO Rajat Monga will leave the bank after serving it for the last 15 years. Listen in.
If we go back to the 18th of September, when some of the promoter stake sale started to happen, from the point of view of personal deleveraging, I think that at that time the share price was 65 rupees, and it has virtually halved from there on the back of the deleveraging that happened from a promoter stake level. We have mentioned that in our media release, and you would have picked that up in the media as well. But I think what it very clearly demonstrates is that the reduction in the share price of the bank is not reflective of the core operating performance of the bank. Rajat has decided to move on. He has, over the last 2 years, with all the load that he has carried, has taken an impact on his health. He thought he needed some time off. People have financial commitments. Many of them have taken leverage to be able to exercise the ESOPs, which is, as you know, absolutely standard. And again, I think in some cases it was to meet personal commitments. In some cases it was to be able to deleverage, which effectively resulted in some of them selling.
Okay, the stock ending sharply higher. I mean, biggest ever single day gain, but that after the biggest ever single day fall. So, squares out. The third story then, IndusInd Bank failed to sustain the rebound after Managing Director Ramesh Sopthi allayed fears over stressed accounts. Speaking with CNBC-TV18, Mr. Sopthi said that nothing has materially changed in terms of bank's operational performance or fundamentals over the last 1 month or the last couple of months. He also added that a succession plan, remember Mr. Sopthi's term as Managing Director and CEO expires in the next 6 months. He's around for the next 6 months. But he said that the stage of planning is over and the stage of execution in terms of appointing the successor will be announced later this month. That is in the month of October itself. Listen in.
As far as we are concerned, nothing really has changed, apart from heightened sort of speculation and conjecture. Because of conjecture on a particular account, a housing finance company, we actually were obliged to inform the stock exchanges through press release on what the actual exposure was there. In fact, we have had very significant recoveries in the so-called stressed accounts. They were not stressed in our book because they're not overdues. Exposures in the sectors have remained almost constant. You will hear from the board and the nomination committee. But I can only say that this process has been going on for quite a while. The planning phase is over, and I think that you will hear about the succession and the leadership change very soon.
Okay, so that really is what is hurting many of the private banks, the exposure to Indiabulls housing. And the day after, the market kind of came to terms that maybe the bank the finance company may not be allowed to merge into Lakshmi Vilas Bank, Lakshmi Vilas going into prompt corrective action status. People with exposure to Indiabulls have been getting the rough end of investors' wrath. Again, let's get the expert Nilesh Shah of Envision Capital. He did speak to us about financial stocks as well, and he admitted that they are going through a rough phase, a consolidation phase. He believes it's the best thing under the circumstances is to bet on the top quality stocks.
One needs to make that difference, because I think clearly it's like this is now separating the men from the boys. I think the events of the last few days, few weeks, few months, I think that distinction is now coming to the fore. And clearly I think financials are also going through a similar consolidation the way all other sectors go through, which means be with the top 2, 3, 4 names. Some of the smaller banks probably are not as well capitalized, and for them a few 100 crores can mean a lot. And to that extent, their asset quality, I think, will remain impaired for a reasonably longer period of time.
Okay, so that is financials in focus, the overall space. Yes, and IndusInd Bank, all of them really, I mean...
one rebounded, the other didn't.
The other didn't, absolutely. Well, it's time for the first break here on the show. Stay with us. We'll be back in a jiffy with a lot more. Welcome back. You're still with us here on Markets Today. Talk Back. We've been telling you the top stories of the day and, of course, wrapping up the day's events. We got through 3 of the top stories, so here's the 4th headline. Two-wheeler stocks saw a mixed day. September sales are better than August for many of these companies. Eicher ending the day with gains of 3%, while Hero MotoCorp closing 1% in the red. So overall mixed. My colleague Sonia is here with the wrap on the monthly auto sales number. Sonia.
Well, thanks so much for that. The big takeaway from the numbers that came in post-market hours on Tuesday is that there has been a sequential recovery in the two-wheeler sales. So almost all two-wheeler companies have reported a month-on-month improvement. Whether you look at Hero MotoCorp, where there's a 12% month-on-month improvement. For Bajaj Auto, of course, we know that there is a single-digit month-on-month improvement. But even TVS and Eicher Motors too, Royal Enfield has seen an over 12% month-on-month improvement. Having said that, it's still a year-on-year double-digit decline that we're seeing, and the worst doesn't seem to be over, especially in pockets like commercial vehicles. So Tata Motors numbers have been quite weak. Medium and heavy commercial vehicle sales are down over 60%. Passenger vehicle sales are under a lot of pressure, and the management says that there continues to be a demand slowdown. However, when speaking to players like Escorts, we do understand that although September was decent, October and November is expected to be better. In fact, Escorts said that by the end of the year, there will be either a flat to a minor degrowth in the industry sales, and a couple of pockets like Punjab, Haryana and the Uttar Pradesh belt are doing pretty well at the moment. So there is a glimmer of hope, definitely. The numbers in September are better than July and August, but you can't say with any great degree of certainty that the worst is over.
Well, thanks for that, Sonia. The 5th and the last headline today, stocks in news. Oil marketing companies spiked in trade today on lower oil prices and, of course, continued government divestment expectations. BPCL, obviously biggest gainer of the day, gaining 8% by end of trade.
IOC and HP, by the way, did very well as well. Shares of Indigo's parent company, Interglobe Aviation, slipped almost 2% today. It was off the lows as the promoter rift has seemingly intensified. The matter has now reached the London Court of International Arbitration. Indigo's co-founder Rahul Bhatia has submitted an arbitration request in relation to the differences between the two promoters on shareholders' agreement and articles of association. Remember, on the 13th of August, Indigo co-promoter Rakesh Gangwal had written to India's market regulator SEBI seeking directions to the company on related party transactions.
Okay. And more stocks in news. We had a weak September, but there are signs of an uptick in the aviation sector in October. That's the word we got from SpiceJet chairman Ajay Singh. Speaking to Shireen Bhan at the India Economic Forum, he said that yields continue to be under pressure because of irresponsible pricing by some airlines. Here's a slice of that chat.
I think in aviation, it's a question of people will travel. People travel and people are quickly moving from trains to airplanes. So demand is not so much of an issue. It's a question of the yields. Can we keep up the yields? That is going to be our challenge. And I think a lot of that is going to depend upon responsible behavior by airlines. I mean, if you're going to sell
Have we moved
Delhi,
to more
Mumbai,
responsible behavior? Or does it continue to be irresponsible?
If you look at the weak season, the behavior certainly wasn't responsible. I mean, if you're selling a Delhi Mumbai ticket for 17 or 1800 rupees, that's not responsible behavior. That's probably less than what you pay for a taxi from here to the airport. So it's tough. But hopefully, as demand picks up, and it will pick up in the festive season, hopefully fares will become more reasonable and yields will improve.
Okay, that is Ajay Singh of SpiceJet weighing in on the aviation space. DLF rose in trade after the company settled the entire 8,700 crore rupee dues to DLF Cyber City Developers Limited. DCCDL is its joint venture with Singapore-based private equity player GIC. We spoke with Director of DLF, Ashok Tyagi, on the completion of the transaction. Listen in.
Now, as of October 1, this complete receivable is squared off. In fact, just to put a perspective, as of January 1, our total external debt plus the debt due to DCCDL was a number in the range of about 17,000 crores, which I think today, as we close September end, should be a number between 3,500 to 4,000 crores. So, I mean, it's been almost a 80% deleveraging of the balance sheet of what it was as of Jan 1.
Okay. Well, one of the big events in focus is the monetary policy decision from the RBI and the MPC. The central bank has cut its key rate on 4 occasions this year. Will it do so for the 5th time? First, let us present what we got from a poll which my colleague Ritu Singh conducted.
The festive season is almost here and the street is expecting a Diwali gift. A rate cut is almost certain from the Monetary Policy Committee as it looks to support weak growth, especially given that inflation rates have remained within its comfort zone. So if the MPC delivers a cut as the street is expecting, it will be the 5th consecutive cut by the RBI since January. But just how much of a cut is it going to be? Well, the recent volatility in crude oil prices because of the attacks on Saudi Aramco, coupled with the potential impact of the government's recent fiscal measures on both the deficit and inflation, could mean that the room for a cut may be limited. The majority of our respondents are expecting a 25 basis point cut. Some are even expecting a 40 basis point cut. For the entire financial year, including this October policy, a majority expects a sum total of 40 basis point reduction in repo rates. Some even expect a 50 basis point cut. Now, with economic activity showing signs of sluggishness, 60% of our respondents believe that the GDP forecast for FY20 will be lowered to 6.3 to 6.5%. Some expect it to be lowered even further. The other key forecast that everyone will be tracking is the inflation, which, remember, inched up to 3.21% for August, but remained within RBI's target of 4%. So all our respondents are expecting the MPC to leave the CPI forecast of 3.5 to 3.7% for the second half of this fiscal to be left unchanged. Lastly, the tone of the policy, no surprises here. Our respondents are expecting a similar, if not more dovish tone from the central bank compared to the August policy.
Okay.
Well, Ritu, thank you very much for that. So that's basically what we are expecting. But I mean, Lata, so much has happened, right? I mean, since the last policy, the big one has been the government's action on corporate taxation, corporate tax cuts.
You put your finger on it, actually. You know, that is the wholly unexpected scenario for the MPC. Just to tell you that my own MPC, the Citizens Monetary Policy Committee, has never been so divided. There were 2 people with 40 and 2 people with 25 and 1 person saying 25 to 40. Therefore, you know, it's actually equally divided. What the governor will have to deliver tomorrow to keep the market happy is to deliver a good cut and say that there's a good chance for another good cut. He has to give that good feeling. There only, I mean, the bond markets could be happy because there is this worry with the GST numbers also not catching up. And
now with external benchmarking, that cut gets translated immediately. I mean, that
only to the floating rate home loans.